Welcome to the Trading Lounge and the European Indices Report, and today we're going to just look at the DAX and the FTSE. And starting with the DAX here, we've got this Elliott wave count in line with the S&P 500 as wave 1 to the upside here, and an A and a B and a C for wave 2 here. Now we understand that many of the other European markets have this move up here as a corrective move, but we do really need to stay in line with the S&P 500 until proven otherwise. Moving in on this to the 4-hour chart, and we want to have a look at a slight variation on the move down here as well. Because we need to know at what point that would be wrong and right. So in this case here, we've got wave 1 here. We're looking for the A wave here. An A and a B is a triangle, and wave C up here. We've got the turn now, and it appears that we do have 5 waves to the downside, and that's very clear in the FTSE. And we're looking for further move down. Now the 60, 50 and 60% retracement level is down here lower, but obviously we've got great support at 10,000 and also throughout this consolidation here, so we'll have time to work that out. It's probable that because the market moved up beyond its 61.8% retracement level here, then it won't pull all the way down through this to this area here, but we should expect it to really sort of poke around the 10,000 and 9,900. The first minor level here, part of group 2, is 9,800. As you can see here, it failed to find support on 10,300, which is the top of group 1. Group 1 is simple 1, 2 and 3, and this is of minor degree, because if we had tested support on top of group 1, well then naturally we'd be looking to go long above this high here, and that setup didn't come. We weren't expecting it, but it's also good to have understanding of the trading levels. So in this instance here, there's 2 things that can occur that we're looking at. First of all, having 5 waves down from this high here down into this area here, and we'll look at that in a bit more detail. The other point here is the 61.8 retracement level. I've got it a bit high here, is actually on the 10,000 here. So it's possible that the market can display 3 waves down to this point here and then move up to that point. If it's anyway, so they're the 2 points, this the 10,000 and also a little bit lower here. Okay, so just drilling into the 2-hour chart with a little bit more detail here. These are the 2 options that we have here. So either 3 waves down to the 10,000 and then a move up from that point, or we have 5 waves down here as expected for wave C of wave 2, and then a move up, but also understanding that the 61.8 retracement level is down here even further. But we'll track the wave structure. I would imagine that the market will come down, bounce off the 10 and sort of poke down into the 9 sort of area here, depending on what other markets are doing around the globe as well, what the general sort of sentiment is here. We understand that these markets, the European markets, are a little bit weaker than the US markets. Well, even in the US markets, there's a variety of stages. The Russell is one of the strongest, then the S&P and the NASDAQ, and then the DJ is one of the weaker ones. They're also displaying 5 waves down as well. On the 15-minute chart here, whoops, daisy, wrong call here. It's taking a little while to load as well, because I'm uploading other videos, but I don't want the 30-minute chart, I want the 15-minute chart. And just to display here that from the top here that we're looking at 1, 2, 3, 4 and 5 down to here, and we'll see this rally here. Rally will be on the sort of buy the rumour, sell the fact on the ECB comments tomorrow. We're also seeing the euro rise and the correlation with the US Treasury notes as well. So the US Treasury notes are moving up, lower yield, so we'll see the euro US dollar bounce as expected in a wave 4, and we'll see the DAX pretty much do the same as well. But what we're actually looking for here is a 3-wave price swing here into the 50-60% retracement level, and then down and so on. Now we're in group 1 here. This is minor group 1 of 10,000. So minor group 1 is 100, 200 and 300, and all these numbers have a particular sort of, well, depending if you're going long or short, but on the short side, we know that if 10,200, the pivot within group 1 here becomes the tested support resistance, then we know that the market's going to be pulled down to the 10,000 at that point. If the number 2 becomes tested resistance, then the 10,000 owns the market at that point. It will be pulled down. So if you see that at a later stage here, then you know that you need to be short at that stage. But otherwise, we'll be looking for a move higher. On the short side of things, if you wanted to short, the safe short, as always, is basically finding the 3 simple waves here, drawing a line through, and then looking to short. And when you're looking to short as well, you know that when a market's coming through a trend line, it likes to move through it, then come back and retest it 90% of the times, and then drop there. So it can have a double retest here too, by the by. So once again, you can do that, but pretty much looking for that kind of, it's a market navigating from one side of the price point to the other. It's like this moving down through here. This level was support, and now it's become tested resistance. So same thing here too. If this low became taken out here, you find your reference point, the retest, and then down again. So that's how you do that. Now I want to have a quick look at the FTSE. I'm yakking on a bit here. There we go, the FTSE, because it had more of a bearish count all the way through here. So what we're actually looking at here is we were looking for a target area at 6.3, top of group 1 again. Number 3 is always group 1. This is minor group 1 as well. Failing to find support there. Will it find tested resistance eventually at number 2 here, the pivot within group 1, and that will be a short trade setup. One of them, of course, there's many roads to Rome as such, but always a nice safe one to use. So what I want to point out here, the move down here is an impulse wave of 5 waves. So what that means, if we get 5 waves in the opposite direction of the trend here, then we'll get another 5 waves over here, and that's what we're looking for. So essentially we're looking for an ABC bounce here. If I can just cut through to the 15-minute chart here to save a bit of time and effort. So as you can see, from the highs here, that we will be looking at wave 1 and wave 2, wave 3 and wave 4. Quite a nice wave count here, and we're looking for a 50-60% retracement level here. So we're looking for the short trade there. We can also look at this on the cash market as well. It's got a clearer 5-wave count down here. So I think this is a 5-minute chart. Anyway, not to worry. The point is this is the physical market. We've got a beautiful 1 and 2 here, beautiful 3rd wave, 4th wave, and 5 waves down here in the 5th wave here. So we have a very clear 5-wave structure there. To us, that is evidence, and it also means that we can go in and short the market as this corrective rally here matures into this space here, so you can build up positions down through here, and there's many ways you can get your trade setups with above the level here and below the level here, and also with the Elliott side of things. Alrighty, well, thanks for tuning in. Cheers.